Welcome back. You're still tuned in to Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking. The fourth headline this evening, PSU banks like Bank of Baroda, Indian Bank and Canara Bank all rallied over 4% after brokerages bet big on the public sector space. Abhishek Kothari is here with the details on why these stocks went up today. Abhishek.
Well, to begin with, Haitong Securities has written a note on PSU banks saying that PSU banks are now better placed with respect to asset quality, which is healing, and relatively better balance sheet. So they expect the stocks under coverage to report a CAGR in terms of loan growth over the next few years at 11.5% versus 11% loan growth that they had in FY22. So coverage ratios are higher, that is PCR, provision coverage ratio, anywhere in the range of 65% to 78%. This is without the technical write-off, and CRAR, that is capital adequacy ratio, is also strong, around 13.5 to 16.5% range. So improving growth trajectory and reducing credit costs would augur well for return ratios to improve ahead. So worst is behind with respect to asset quality woes. They expect a slippage ratio to be around 1.6% between FY22 to 25. So they expect PSU banks to report a strong earnings momentum, a CAGR of around 23% over the next few years, with ROAs close to touching about 0.9%. So they have initiated coverage on the likes of Canara Bank and Indian Bank, while across their coverage universe in terms of PSU banks, they have an outperformance rating. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's the entire PSU banking lot, which was higher today. But let's move on to the fifth story this evening. V-Mart gained over 1% after the company's management told CNBC-TV18 that the company has bought Limeroad. Manglam Malu is here with the key highlights of that conversation. Manglam.
Well, V-Mart was in focus in today's trading session. That's primarily because they've gone ahead and bought the online pure play fashion brand Limeroad for about 67 odd crore rupees, which includes, of course, the upfront cash that they're paying, a little over 30 crores, and the liabilities that they're assuming as well. V-Mart had initially invested or planned to invest about 100 crores over the next few years to build up their omni-channel presence itself, and this was a step in that direction also. And additionally, they plan to invest around another 60 to 70 odd crores in this business over the next couple of years to scale this business up from about 10%, less than 10% of their sales online currently, to about over 20% over the next 24 to 36 odd months. Importantly, there are a lot of synergies between the two businesses as well. Limeroad has a strong customer base in UP, and V-Mart has a large proportion of their stores in UP as well. So synergies there. 70% of V-Mart's customers and 65% of Limeroad's customers are non-metro tier 1 customers. So in the deeper ends of the country, these are strong brands. And secondly, 30% of the SKUs or stock keeping units sold by Limeroad are sub 499 odd rupees, and this compares with V-Mart's 56% customer base or SKUs being sold sub 500 odd rupees as well. So as a result of which, while Limeroad sales have been falling from pre-COVID peaks of over 600 odd crores to about 170 crores, 180 crores in FY20 to just about 69 crores in FY22. We believe that V-Mart's scalability could increase it further, and V-Mart's management himself said to CNBC-TV18 that from about 10 crores per month, this business can go all the way up to 50 crores over the next 12 months itself. And while it is making small losses, it will turn EBITDA positive over the next 2 years as well.
This is definitely a very good acquisition that we have had, and this is a great team. Limeroad, which was run by Suchi, so she's the founder, Suchi Mukherjee. Slowly and gradually, this millennial crowd is definitely going to acquire more and more digitalization, and that's where we are getting prepared for, and that is why we took up this opportunity. And this is a great team which has a great technology, and we could really build onto that. But yeah, as far as revenue is concerned, they had a very good peak pre-COVID, and post-COVID, they have gone a little bit down, and they have suffered. But as of now, it has a 10 crore plus run rate per month. But yeah, I think we will definitely scale it up immediately within the next 12 months to the pre-COVID levels. There is a loss which is which is small right now. But I think we could, with the expertise at V-Mart, the product expertise at V-Mart, the qualities that we can offer, and the kind of deliveries that we could offer from our stores, which are 410 doors as of now, where the customer delivery could be much cheaper and much faster. That's the opportunity that we'll try to use and make this system efficient. And that's the real omni piece which will come in and could become efficient and profitable in the next 2 years.
Okay, so that's on V-Mart, but there were a whole host of pharma stocks which were in focus today. I'll start with Aster DM from the entire hospital space. That stock was in focus as Aster Pharmacy is basically they are going to be entering Saudi Arabia and starting pharmacies within that space. So they have formed a joint venture. They will be establishing, managing and operating pharmacy chains across Saudi Arabia. The company will market and commercialize pharma products under the Aster Pharmacy brand. So that they will start with around 250 plus stores in the next 5 odd years. And phase 2 will also include setting up a pharma manufacturing zone in Saudi. So that's a positive for Aster DM. That stock was higher by around 3% odd. RPG Life reacted to its numbers where revenue was at around 135 odd crores. Margins were maintained on a year-on-year basis and profit came in at close to around 20 odd crores, which was a growth versus 15.75 crores year-on-year. And Q-on-Q as well, 135 crores versus 129 crores on a Q-on-Q basis. Margins maintained again sequentially and a higher profitability on a sequential basis. Gland Pharma was in focus because Morgan Stanley wrote on it. They have an overweight with a target price of 2478. They say that the company has entrenched its presence in a difficult injectable category and the capital efficient business model is something that Morgan Stanley likes. They initiated coverage on Gland Pharma and they expect around a 22% EPS CAGR. And lastly, Alembic was in focus because the US FDA inspected their oncology injectable formulation facility. They issued them 4 observations to this particular plant. The company, however, said that the observations are procedural, no data integrity issues, and the observations are addressable. So these were a couple of stocks which were in focus from the entire pharma and healthcare space. But let's move on then. Adani Transmission rallied over 6% after its second quarter operational update. Vivek Iyer is here with the details.
Well, that's right. So Adani Transmission actually went ahead and gave an operational update for the quarter gone by to the exchanges. So now when you're looking at the internal of this particular update, it's quite a strong operational performance that the company has managed to deliver. Now remember, the company operates both in the transmission as well as the distribution segment. And when you're talking about the transmission business, the operated transmission lines were northwards of 99.7%, so a strong number coming in there. Very interestingly, when you're talking about the distribution business, the distribution utility business actually has gone up almost 13% on a year-on-year basis, so another strong number coming in there. And more importantly, when you're talking about the distribution loss, which a lot of the distribution companies actually face, Adani has actually managed to go ahead and reduce or minimize this particular loss to around 6% in Q2 FY23 versus 7.6% last year around. So on the back of these improved metrics, you're actually seeing the stock do quite well in today's trading session.
Okay, all right, Vivek, thanks very much for that. Canfin Homes, in fact, rallied around 3 to 4% after it delivered its second quarter numbers. Abhishek Kothari is here with the details.
Well, it was a mixed set of numbers coming in from Canfin Homes. The standard asset provision was at 33.5 crore. This is suggesting that they might have made provisions on SMA 1 and 2 accounts, given the fact that, you know, it's much higher than what the loan growth has been. So net interest margin has declined to 3.55% when compared to 3.6% in the previous quarter. This is on the back of the fact that, you know, non-salaried segment has grown faster than the salaried segment. Tax payment was at 30.1% when compared to a little under 26% in the previous quarter. AUM growth has remained healthy at 22.2% YOY and about 4.7% sequentially. However, operating profits were weak as they grew by just 0.5% on a quarter-on-quarter basis. Provision coverage ratio has declined sharply to about 43.4% when compared to 54.4% in the previous quarter. So NII was a beat on our poll. However, profits have come a little below our poll. So brokerages have a mixed view on the stock. Jefferies have a buy recommendation with a target price of 750 per share, while on the other hand, Investec has a hold rating with a target price of 625 per share. Back to you.
Margins will be maintaining at around 3.5% in coming days, and spread will be at around 2.5%. Disbursement generally happens during third and fourth quarter, and we are in line with our projections. So I think third and fourth quarter will be disbursing as we have done in past, and so disbursement will be quite good during third and fourth quarter.
Okay, well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.